If you're a private equity GP, it's best to find respected third parties who compile the market proxies for you. Ultimately, numbers like beta or market multiples, they'll be considered part of your marketing materials, so your life will be easier when they are simple and non-controversial. It must be obvious that you're not just cherry-picking values to make your deals look good. You need to maintain some level of philosophical consistency where your analysis is easy to defend and simple enough to explain in a footnote that's only 1 or 2 sentences long. An example might look like this chart, which you can find for many industries. This estimates the addressable market size in dollars for each year. You can use these numbers to calculate your beta or even plug them directly into your model as AM1 or AM2. Just make sure you use data from a reputable research firm, and it's best if they update the reports relatively frequently. That way you can use the same addressable market datasets for future deals as you do for your historical deals. Now, quite often you won't get the addressable market in dollars for every quarter that you need, but the report will say something like, between the years 2010 and 2020, the medical device market grew at a compounded annual growth rate of 4%. We can also use this to calculate beta. It would be 1 plus the CAGR raised to the power of the holding period minus 1. If the deal in question was held for 3.5 years, you would get a beta of 14.71%. Now, the alternative is to build your own addressable market datasets. You might maintain a set of medical device numbers that look like this, or you might manage several datasets, one for each of your target industries. I think that this approach is particularly interesting for limited partners. You can build a handful of datasets like this and use them as standard benchmarks to evaluate all your private equity deals and managers. It's like PME, but it's better because 1, you have a ton of flexibility in tailoring the datasets to the markets or industries, sectors, or deals, and you don't have to worry about the different leverage levels between the private equity companies and the public companies. Our models correct for that automatically with the leverage effect and gearing value drivers that we discussed in VC 107, 108, and 109.